Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with EverAg are their own and do not reflect the views of EverAg. The accuracy of their statements cannot be guaranteed by EverAg.
Hello and welcome to another edition of the Grain Feed brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives, but amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a rainy little Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and from Washington, D.C., CEO of Waterways Council, Mr. Tracy Z. Team, how are we today?
Doing very well this morning, Jim.
Doing excellent, Jim. Thanks for having me.
Absolutely. Great to have you on, Tracy. Thank you for joining us. I think we've got a lot of really fun stuff to talk about. Jake, we had a big few days driving around your home state, good old Kansas. How'd you feel about that, Jake?
Felt great. First time to make my way all the way across state and back in the better part of a decade, I think.
Yeah.
Finally got to show it off to somebody that, probably didn't appreciate it as much as he does now.
Well, I tell you what, the one thing I've taken back with me from Kansas is the pollen and a severe allergy attack here of the last 12 hours. And Jake, I did bring back some whiskey. In my old check-in bag.
There you
Checking
go.
that in at the gate at the Salina, is it International Airport? I want to make it sound grand. Probably
it's
not.
Grand in this region.
at gate one at the Salina Airport. I did get that whiskey through. So just letting folks know what else I brought back from Kansas. Not just pollen symptoms here, but a little bit more fun as well. Got a lot to run through here, but before we do, Tracy, would you mind just giving the viewers and listeners just a quick intro? Tell us about yourself for a minute.
Tracy Z, President CEO for Waterways Council. For everyone who doesn't know who Waterways Council is, our mission is to advocate for a modern, efficient, reliable inland waterway transportation system. So what does that actually mean? Our sole purpose is to advocate to ensure that the infrastructure on the river is receiving the correct funding so that we can catch up to today's standards. So if you think about a lock, it's the elevator of the river. We are making sure that those are expanded. And then the other thing that we do is we make sure that the channels are dredged to the proper depths so that you can get in and out of the harbors so that, products can make it to market. By Washington, D.C. standards, we are considered a small association. We only have 5 employees. 3 are based in Washington, D.C., 1 in Paducah, Kentucky, and 1 in St. Louis. We have a $2.8 million budget that is 90% paid for by membership dues. So we like to say we are a member-led organization. From the ag world, just to name drop, Cargill, ADM are all members. So, very, very in touch with the agriculture side of things.
Okay, excellent. And we'll be looking forward to some of those insights here on the show today. So excited to have you, Tracy. Real quick, Lexi, if you would kindly timestamp the broadcast, it's about 10:05 Chicago time on Thursday morning. Quick snapshot of the markets here, just because we did have that big WASDE and crop production report on Monday. So that gave the markets a little bit of a shakeup. And despite having seemingly, let's say, neutral to bearish corn numbers, we have seen corn make its way back up to $4 and attempting to hold it, not with a ton of success at the moment. But as we record, we're trading $4 even on December corn. So we had a little bit of that sell the rumor, buy the fact type of mentality after Monday's report. But we're still holding $4 on Dees corn. We've got Nove beans, though. Beans had a different story, right? They got beaten down, Jake, and not really recovering all that much from that beatdown. We've got Nove beans, though, is managing to come back up towards 980, which for our soybean producers is a better look than 950, which we were flirting with there for a little bit. December meal, that stubborn little byproduct, is back up towards 310, right? So even though soybeans themselves were hammered, we have seen meal at least maintain a little bit of support. Not necessarily strength, let's say, but holding above 300. We flirted with that two handle finally. We'll talk about that in a little bit, but back above $300 per ton as we record on Thursday. Now, Jake, we were driving around Kansas, beautiful country out there across, we saw a pretty good chunk of that state over a handful of days. And I think the one big thing that obviously everyone is talking about, we witnessed corn silage chopping, at least at this stage already. That's going to be happening a little bit further north up in my neck of the woods, probably in the next, let's say, 3-ish weeks, depending on when you got your start and had that in the ground and what your weather has looked like here over the past couple weeks. But then the biggest excitement of all, of course, the U.S. Midwestern grain harvest. It's coming. That window is about to open up, and we're going to be super excited, and that grain's going to be moving. And that's how we've got Mr. Tracy Z here to talk about that exact movement and how we get that grain around the Midwest, but not only down through the Midwest, but of course out of country potentially for export as well. So, Tracy, what have you been seeing lately here in the, let's say, U.S. transportation system?
From the inland waterways perspective, it's been an interesting 2 to 3 years due to Mother Nature and her conditions. We saw in 22 and 23 extreme low water conditions that we haven't seen in about 16 to 17 years on the river. We had channels shut down and not at their depths for over 50 to 60 days on average, which obviously hurts the farmer trying to get their commodity to market. From a river infrastructure standpoint, it's not a secret that these facilities are extremely old. The majority of the facilities were built in the New Deal era in the 1920s and 30s. There has been some modernization. Our average age of a lock right now is 59.7 years old. So, problem with that is they're only supposed to last 50 years. So the risk of failure goes up exponentially every year past 50 years. And 80% of our locks are past their 50-year design life. So the need to modernize these facilities. One thing, though, there is a good news story. So the last 10 years, there's been $4.7 billion in additional funding provided to these lock facilities. $2.5 billion of that came 3 years ago through the infrastructure package that helped modernize 5 facilities. The bad news is all 5 of those facilities were considered funded to completion under that package. It has came back due to inflation that all 5 of those facilities will need 100% more funding. So we need an infrastructure package for the infrastructure package. But, Congress has recognized that there's been a lack of funding for the Corps of Engineers in order to bring the system up to 2024 standards, and has also provided additional $2.2 billion above the president's budget. This is a very, very good news story. Just about 12 years ago, the Corps in total used to only receive $5 billion to manage navigation, that's your locks and dams, that's your ports, flood control, and ecosystem restoration. This year, the upcoming bill is $10 billion. So they more than have doubled the Corps of Engineers budget. This is a very good news story, but the problem is this should have been done about 10 years ago. One thing, though, that we are watching at Waterways Council is that there's been 4 projects that have been under construction, and the problem is it's taken the Corps 20 years to construct. This cannot be the future. If we want to have our farmers remain competitive in foreign marketplaces, if you look at Brazil, China has dumped a lot of money into their infrastructure. If we want to remain competitive, we have to construct these facilities in a 6 to 8 year time frame. The Corps has an opportunity with the infrastructure package and receiving those large sums to show that they can execute and construct these facilities in a 6 to 8 time frame. Because if we continue down a 20-year construction mode, we have 218 locks. Each one takes 20 years. I mean, all of us on this call will be dead. Our kids will be dead, and our kids' kids will be dead. I hate to be upfront and honest, but it's just the truth. And, we just would have to look at different ways to build them. So, Congress is providing the Corps the money. It's time for the Corps to actually execute and build these facilities like they did in the 1920s and 30s.
Okay. And are there ways for private contributions to also maybe step in where the government does not, to help at least kickstart more of these improvements? Or has this always been historically, this is owned, maintained by the Corps of Engineers? funded by the U.S. Congress, and that's how it's always going to be?
So that's a great question, Jim. We are actually the original public-private partnership. So we have a fuel tax that the operators pay that is 29 cents a gallon that goes in and pays for 35% of all construction. Industry in 2014 recognized the need to modernize the system, and we increased our fuel tax by 45%. So we went from 20 to 29 cents. Now, industry went to Congress and asked for a tax on themselves. I'm pretty sure every elected official thought we were crazy, but industry has stepped up, and it's time for the Corps to come to the table and actually execute. And that's what you're seeing with that $2.2 billion from Congress, is that additional funding from industry contributing more dollars.
And Tracy, you mentioned the age of these locks, within our river system. I mean, is there an element where if some of these begin to seriously falter, is it catastrophic in the sense of truly our river transportation systems come to a complete halt, or is it more of a severe delays but in exports, or what's the impact there potentially as these, you said 200 plus locks that are average age 50 plus years? What's the impact if they start to fail?
Shuts down the whole system. So that's the one thing with the river and the lock, is you're only as good as the next lock. So, National Waterways Foundation, which is the research arm for the inland waterways, did a study on what happens if there's an unexpected failure and who's impacted. There's a lock, LaGrange, that's in Illinois, just right off the Mississippi. The number one commodities that go through that lock in the state that's impacted most by that lock is Texas. So if that lock fails, you shut down that whole system on the Illinois, but also no tonnage getting down the Mississippi. We actually had a catastrophic failure this year down in Alabama at Denopolis Lock. That lock had a failure. The sill below the gate, the concrete blew out and water just rushed through. That shut down that whole system. No traffic moved north or south. And if you were luckily, you could go up and around down to the Mississippi, but that added 114 days. From an economic standpoint, when you're looking at, shipping grain or aggregates, that 114 days and that cost, you might look at truck or rail. So the benefit of the rivers being a cheaper mode of transportation because of bulk goes away. But also though, not only it's a social impact too, because the river is the greenest mode to move surface transportation. So when you're taking tonnage off the river, you're going to add it to truck and rail, which will pollute more. So it shuts down the whole system. There's about 500 million tons of cargo that move on the inland waterways, and about 16% of that 500 million is grain every year. The number one product right now on the inland waterways is petroleum. That represents about 20%. And, coal used to be the king of the river, but since 2008, there's been some policy changes that have driven coal tonnage down. But I want to go back to petroleum. So river is the one place where you can add additional tonnage and the American consumer can feel the benefit, but yet not sit in traffic and wait for it. You look at Nashville, Tennessee, they used to receive less than 1% of their gasoline via barge. I don't know if either of you have been to Nashville lately, but there's been a little explosion of population there, and their pipelines are maxed out for receiving gasoline. And this year, Nashville is going to receive 40% of their gasoline via barge. So that is an example. You look at soy, you look at the crushing numbers, the potential for jet fuel, that could go to the river and we could ship and add additional tonnage on the river. Right now, Chicago O'Hare receives all their jet fuel via barge. So adding additional, products coming from crushing of soybeans, could be done, and we can handle that on the river system.
I think it's something that, a lot of folks probably don't stop to reflect on is how lucky we are as a country in terms of having this pre-existing mode of transportation that other nations don't exactly have. And it's the river, right? You said we're at the whims of Mother Nature, of course, but we also have spent a long time trying to at least, maintain that system ourselves. It's not easy, right? And it has to be updated. And it's hard to imagine the tonnage that you mentioned then being pulled off the river, not just obviously, of course, we want to do what's right for Earth, of course, but there's also an element of that cost of those delays. The idea of putting all of these grain barges potentially onto rail or truck. I mean, as Jake discusses at length with folks, we are watching how basis is impacted on a daily basis for our dairies feeding animals and having to buy grain and feed off the rail and off truck. If you start to overload the Midwestern system, that has a massive impact on rail basis and truck freight on all corners of this country. And that's just on the ag side. You mentioned too, I mean, O'Hare, I mean, that's a massive, massive facility getting all of its fuel via barge. I mean, this has a huge impact. And you also noted, Tracy, that, the Chinese have very much turned to Brazil as, not only its key partner in purchasing grain from them, but those actual investments in infrastructure along many of their key ports, even helping build key ports. Obviously, the Brazilians do have somewhat of a water system, but not nearly as efficient as what we have in the U.S. So if they continue to improve while we do not, obviously that's a huge issue then for our markets here. So
one thing, Jim, is the Belt and Road Initiative done for China is working, right? You're not seeing trucks getting stuck on mountainside roads anymore. They're cruising down paved roads. They're having nice ports that are automated and efficient and, really reducing the cost, where USDA puts out, cost of transportation every year. And if you pay attention, it always compares, same soybean to go from Iowa to China as Brazil to China. The gap that US used to have that made us competitive and why China bought so much grain and soybeans from us was because of the inland waterway system, because Brazil had to truck it to the port. Well, now that gap is shrinking because Brazil's cost on roads is shrinking so much. So if we don't continue to invest in the inland waterway system, we're going to be out of a market for our commodities.
Jake, anything from your side?
You had mentioned jet fuel and all of this crush capacity. I think our feed buying listeners here have had a lot of questions about all this new crush capacity coming on in the soybean and soybean meal space. And obviously being able to move that oil around is going to be helpful to keep that market fluid. Do you foresee us moving a lot more meal out of the country on the river, given that we'll probably have an increase in supply? You had mentioned earlier that maybe it just moves up and down the river to get to different parts of the U.S. a little more efficiently. But what do you guys foresee as far as having fewer beans to export and more meal sitting around? Where does that go on the river?
I think if there's a way that the economics make sense, it will move on the river. And that is what it will come down to. The transition is coming, and that our industry is paying attention and adapting and finding ways to make the economics make sense. I am an association. I'm not a business, so I don't want to forecast on what each of these businesses are doing. From my standpoint as an association, I hope they are preparing. I think they are. If it economically makes sense, we will move it via the river.
Are you guys privy to any information like these exporters at the Gulf? Are they changing their facilities to handle some of those products?
Yeah, there's definitely that modernization as far as the facility land side goes on the capacity to take it, right? So one thing with the river system, if you look at it, everyone keeps saying container on barge, container on barge. That's the way of the future. That's been going around since the 80s. And the reason that container and barges aren't moving more is because the landside infrastructure. So if you relate that to the crush side, I think you're going to see the modernization of these landside facilities in order to take that product.
Jake, in terms of these, we've talked a lot now about the Midwestern logistics here and how it does impact, all corners of the country. And you've been watching, of course, rail markets very closely, especially given the situation up north in Canada and how there's this looming potential and very real potential for a strike and how that could impact not just our canola basis, but really any basis as that, that whole system tries to figure out what a shutdown would mean in the northern areas of the country. What have you been seeing or anticipating here in the last week or so in that regard?
Like you said, it's starting to look like it's probable if we don't get some sort of resolution very quickly. The authorities up there have stated that they will initiate a full stop midnight or a minute after midnight on August 22nd, which is just a week away now. That would mean that we stop movement of all product out of there. Our focus has primarily been canola, but obviously there's plenty of other things that are going to be moving around in the feed world, some mineral and different things like that. But I think probably more important is the fact that not only do you stop rail cars moving for a day or two or however long this lasts, talking this morning with some of the rest of our team, and Natalie made a good point, is that these crush plants don't want to and really can't afford to go cold stop their facilities for days at a time. If they have to, because they can't get product out of the way, then they will, obviously. But really what happens is they've already started slowing down production so that they can extend that storage capacity that they have on site or reduce their need for rail cars of both oil and meal to move out of there. So they've already started reducing their crush capacity so that they can weather this thing a little longer without going full stop. So that's going to, and probably is largely priced into the market, but that's going to affect price, particularly on basis, right? You're just producing less meal, and it's going to take weeks after this is resolved. Start the clock once it's resolved. It's going to take many weeks to unwind that backlog of rail cars and lack of production and all that. And oh, by the way, it's going to be just a handful of days ahead of the start of harvest when you have your highest demand for freight. So we could be in a real mess here if this thing doesn't get sorted out very soon. And the best advice we can give is to be sure that you have probably the next 60 days worth of feed bought and you have your inventories on farm fairly well padded, and you're giving your vendors plenty of lead time on what you will need so that you can get the products that you need as reliably as possible in a situation like this. I mean, you got to be moving ahead of it. Really, that's all that there is to say about it. So we saw the WASDE report this Monday come out, and it looks like we've got a heck of a good crop coming, both in corn and beans. We're going to need to be able to move this stuff efficiently, so it's going to have an effect on feed buyers, grain producers, everybody involved. So we're watching that one fairly closely.
Okay. Anything else from your side, Jake?
Really, I think we saw some of these WASDE numbers come out on Monday and kind of move the market around a little bit, but by and large, our opinion is still the same. We think there may be some downside opportunity. It may take harvest to get some of those prices to move lower, but at the same time, we're seeing very attractive cash values that you got to be doing something here. I think a lot of our folks, we've got them at least half of their protein for the next feed year bought. We've got a quarter to half of corn bought for the next year. And it's starting to feel like, you know what, if you haven't done that yet, it's becoming very urgent. Basis could get pretty funky. We've seen futures already jump up 10, 20 cents, 30 cents in a couple of days. And on the protein side, $8 or $10 a ton in a day or two. So really, we're in the bottom, probably 15% of price here in the last 10 years. We run out of room to the downside. It's time to get something done, especially if we get a little bit of a logistics snafu.
Yeah. And I think, Jake, we've been talking about this for a handful of weeks now, but we continue to do so even after this WASDE report on Monday. It is okay to be bearish this market and still step in and own it and or hedge it, right? Like, you don't have to start owning physical just because you've turned bullish. I think it's okay to say we still feel that prices will remain under pressure and potentially move in, let's say, maybe a neutral sideways pattern here, at least between now through harvest, and say, that's okay to still step in and own it. We saw those from a futures perspective, right? You've talked about how basis has come down to pretty darn close to its lows historically. We've seen futures come down to levels we haven't seen in 3.5 to 4 years. It's okay to be bearish and still start buying stuff at 4-year lows. In fact, I think it's encouraged. So we don't want to be too complacent. I think we know there's probably significantly more upside risk at this stage than there is downside potential from a physical feed perspective. And also, Jake, talking with dairymen all week this week in Kansas, look what milk's doing. Let's buy feed where it is. You take advantage of where that is. Maybe you've got a margin on your hands. I don't know, but it's something to think about. But we've got a lot happening here and very much value both of your respective inputs today. Tracy, thank you very much for being with us. Really great to have you.
Thanks for having me too. I appreciate it.
Absolutely. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Lexi for her production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the grain feed.